William Mougayar is a prolific researcher, writer, and theorist who has been described as the most sophisticated blockchain business thinker. He is a direct participant in the crypto technology market, working alongside startups, entrepreneurs, and enterprise executives, as well as serving as an investor and advisor to some leading organizations in the space. William is the general partner at Virtual Capital Ventures, an early-stage venture capital fund. He serves on the board of directors at OB1, the open Bazaar open source protocol that is pioneering decentralized peer-to-peer commerce, and he is a board advisor to the Ethereum Foundation, Omer's Ventures, Coin Center, and Block. He has held senior level positions at Hewlett-Packard, Cognizant, and Aberdeen Group, and he has founded 3 startups. He is here today to present his new book, The Business Blockchain, Promise, Practice, and Application for the Next Internet Technology. Please join me in welcoming Mr. William Mougayar.
Thanks, David, and hi, everybody, and thanks very much for inviting me to talk to you about the blockchain, arguably one of the most innovative technologies since the internet in terms of impact, scope, potential benefits. And if you look back over the last 22 years and you think about what the internet did for us, for our businesses, our societies, our cities, our world, and then you can imagine this new force that is coming on the horizon, and that is really the blockchain. And that's the impact that we are expecting in terms of the magnitude of the potential benefits of the blockchain. So it's kind of strange that I'm speaking about the blockchain at Google here. It kind of reminds me a little bit, this is like talking about e-commerce to Walmart in 1995, before online retail was popular, whereas Amazon had been already founded a year before. And I'm saying this because visibly there doesn't seem to be anything that Google has said, or maybe you're doing something that we don't know about. And actually, I was in Paris last month speaking at a conference, a WeShare conference, and specifically one of the questions was, how come we don't hear from some of the big players like Google, Facebook, Amazon? They don't have any visible involvements with the blockchain. And they asked me why. I said, I'm not sure yet, but I was invited at Google to talk next month, and then at least it's a good step. So we'll see what happens. So the blockchain novelty started really as a melding for the first time of the 3 fields of software engineering, cryptography science, and gaming theory. And this all started with the paper, the famous paper that Satoshi Nakamoto has written in 2009, where really all he described was a peer-to-peer system for sending money. So he described an electronic money system that allows cash to be sent from one person to another without the presence of any intermediaries in the middle. So that is really the essence of the Bitcoin innovation, which started in 2009 as a white paper, which was then implemented after all. So this is very important. It's a fundamental element. If you understand that, then you understand all the benefits and the potential implications of the blockchain. So you might think, well, what's the big deal about sending electronic cash from one person to another without the presence of intermediaries? Because you might be thinking, well, the banks are allowing us to do that. So, but here is the difference. The banks really are doing this because they have databases. So if suppose I deposit $1,000 in my bank account, all they are doing is updating a record, updating the database, and there is a record that points to the fact that I have $1,000. And if I want to send, let's say, $10 to David, then the 2 databases are going to synchronize with each other, and they'll take $10 from my account, and they'll send that, and they'll put that $10 in David's account or in your account. But really what this transaction is all about is about updating 2 databases, and hopefully they are synchronized so that when the $10 leaves my account, then I don't have it anymore, and David has it. Unlike the fact that if I took a picture with my smartphone and I sent it to somebody here in the audience, I still have a copy. But with money, obviously, we cannot do that. And this is what is called the double spend problem. And what Bitcoin as an innovation and the blockchain technology behind it did for the first time, it solved that double spend problem without somebody in the middle. And that is really the innovation, is without somebody in the middle. That is so key and so important, because it is supposed to do that and to allow us to do that without the banks being in the middle. So then we started to evolve this thinking, and we said, well, this is just something digital, right? When we're sending money, it's a digital token. So we thought, well, why not send anything that's a digital asset? Because if I can send money so quickly from one person to another, so why don't we send bonds, financial instruments, ownerships, titles, licenses, whatever has a digital form now can be sent because it has digital value. So now the blockchain becomes a rail, it becomes a new rail, a new kind of internet in terms of passing not just money, but passing any digital asset. And that is really the future of the blockchain. Is some people have called it the internet of value, because we are now sending value between us, each other, peer to peer, without having anybody in the middle, not just money. And then we said, well, how about if we program this money? Because really, it is programmable money. Now it's all based on software, so we can program the money. And how about we add some logic to how we program the money? So then we said, okay, let's program some business logic, if this, then that, and these kinds of scenarios. And this is where what is commonly referred to now as smart contracts is coming along. So smart contracts is just another way of saying it's business logic that is often tied in with contractual terms that often has money in the middle changing hands, if this, then that, and then the money changes hands. So this is really the essence of the blockchain as a starting point. Now, there are other ways to view the blockchain, and I like to always describe the blockchain in three different ways: a business way, a technical way, and a legal way. And we can have three different definitions about the blockchain. Specifically, if you look at it from a business perspective, you think of it as an exchange network for moving value between peers. If you look at it from a technical perspective, you would think of it, it's like another kind of a database. It maintains a distributed ledger that is open, that anybody can check. And thirdly, because it has legal implications, you have to look at it from a legal perspective as well, because it's a transaction validation mechanism without anybody in the middle. So when these transactions are actually validated, then they hold. They are true, and they are respected, and that is a legal aspect of it. So really, you want to think of the blockchain as a combination of business, technical, and legal innovation, and only when you have the three of them together that you really have the true power of the innovation. And I'm saying this because it's a very important aspect. Why? Let's look at what the banks are doing, for example, when they are implementing the blockchain. The banks, we cannot talk about the blockchain without talking about what the banks are doing. There's lots of activity in the financial system right now because it is about money after all. So what the banks do is they look at the blockchain and they say, well, the banks, as you know, are very much regulated. So their starting point is regulation. So they start by saying, well, we are regulated. We're not going to touch regulation. We want it to live within our own regulatory environment. So let's not touch that. And then they look at their business. They say, well, we've been in business for 100 years. Customers trust us. We're not going to change our business model. So they strike out the legal innovation. They strike out the business model innovation. What is left? Technology. And then when you implement technology, then it starts to look like just another IT project. Yes, it's going to maybe allow you to have some processes that are faster. You may be able to save some money. But really what you're doing, if you're just looking at it as a technology, is you are just implementing something without a database, and you're having the blockchain there in the middle replacing some parts of the database. Because the blockchain maintains its own ledger. It doesn't need necessarily a database, two databases to reconcile a transaction. It is only one ledger that everybody has a view on. So that is really the innovation. Again, remember the old way was one database talking to another, so we need two databases, and we need two owners, one for each. Whereas the blockchain is only one ledger. And once you write a line on the ledger, it's just like any accounting ledger. You cannot erase the line above it. You just write a new line, and then you have a chain of history. And everything is recorded, and nothing can be erased. And the only owner of the blockchain is the only owner of the ledger is the blockchain itself. So the network self-polices itself in terms of updating everything. And that is really a very important aspect. So unfortunately, some of the banks have a lot of activities going on right now, but they are really looking at it as a technology and not really innovating. But you have to think of the innovation potential beyond just the technology. I like to describe the blockchain in terms of its many facets. In the same way as the internet today has many facets. And if I ask each and every one of you, what does the internet mean to you? Depending on what your focus is, you might see it as a publishing platform if you're very much into blogging, or you might see it as an e-commerce platform if you're selling or buying something. You might see it as a development platform if you're a developer developing some kind of web application. You might see it as a social media platform if you're just focused on that. So everybody started to have their own version of what the internet is, because the narrative of the internet was so strong. With the blockchain, we're still in the early days, but the narrative of the blockchain is very strong as well. And I like to describe it in many different ways. It's like 10 different things. It is not just a cryptocurrency, although that is a prevalent thing that everybody thinks about first. If you're a consumer, if I say blockchain or Bitcoin, you're going to think cryptocurrency. And if you're a business, specifically a bank, if I say blockchain, you're going to think distributed ledger. These are fine. These are good definitions. And yes, it is cryptocurrency. Yes, it is distributed ledger, but it is more than that. It is a computing infrastructure. The Bitcoin blockchain has about 6,000 nodes, computers around the world. The Ethereum blockchain also has about 6,000 computers in the world. So it's already out there. It's in the wild. It's almost like having a thin layer of cloud-based computers all networked together. It is also a transactional platform because we can validate transactions. It is also a decentralized database because you can store information on the ledger. And the ledger could have many different usages. Yes, it is a distributed ledger. We talked about that. It is a development platform. Arguably, it is the next development platform after the web. Today, web applications are very prevalent. Obviously, everything is on the web, more or less. And we have close to 10 million JavaScript developers in the world. Java was an incredible advancement when the web arrived. As a comparison, I'm not sure how many would want to guess. Do you know how many blockchain developers do we have today in the world? Approximately about 5,000 only. So compare that, 5,000 blockchain developers, 10 million Java web developers at least. So this is where we are, and this is where we need to be in terms of being able to have blockchain applications everywhere. It is open source software. All the innovation, whether it's Ethereum, whether it's Bitcoin or other blockchains out there, it's open source innovation. So it means there are many contributors and many developers around the world that add to it. It is also a financial services marketplace because now we can buy and sell and transfer value and assets. The capital markets is very interested in the blockchain because they can speed up the settlement, the clearing to settlement timeframe. And then it's obviously a peer-to-peer network from a technological perspective. And it's also a trust services layer. And I'll talk about some of the services that we will expect to see on this new layer, which is called the blockchain. If you look at it from an applications perspective, you want to think of the blockchain as being at par with the web. So if you think about it, the internet came first, right? And then the web came after. And the web was a protocol that sat on top of the internet. And the blockchain and the blockchains are another protocol that sit as well on the internet. So technically speaking, you can write a blockchain application without needing the web. You just write the application straight on the internet. And I'll give you some examples of that in a few minutes. So technically, the web is not needed for the blockchain. However, what is happening, we have a reality. We are users of many web applications. So the reality will be that we're going to have a mix. We're going to have some pure native blockchain applications that just go straight on the internet. And we're going to have some hybrid ones that maybe have a foot on the web and a foot on the blockchain. So it might take data from the web and take some data from the blockchain and put it all together. And then since we have public and private networks, as a matter of fact, like for example, the financial networks are private, so we can expect to have variations of native and hybrid blockchain applications, both in public settings and in private settings. So think about it that way in terms of going forward. Some quick basic concepts to just make sure that we all understand them. These are kind of like basic tenets of the blockchain. Number one is the concept of smart property. And a smart property is just a thing or an asset that knows who its owner is, really. So now if the stock knows who the owner is, then you can trade it peer-to-peer. It knows when its ownership has changed. So that is kind of an element. That's what we call smart property as part of the blockchain concept. Timestamping is a very important element because once you timestamp something on the blockchain, that's it. It's immutable. You cannot change it. So think about the implications in terms of proving the existence of something, or proving that something happened at that particular time. You can say that you can check the time of a particular event or a particular validation of something. So this has enormous implications as far as the services that can be mounted on top of this timestamping element. It's a very important aspect of blockchains. Thirdly, multi-signature transactions. And if you think about it as the equivalent today is like when you sign a document, there are some documents sometimes that require 3 signatures, let's say, not just 2 or 1. And it is that, really, but applied on the online world and applied in a way with encryption in a way that is validated. So when there are 3 signatures, let's say, on a particular piece of transaction, where maybe there's some rules that say if this, then that, if we have 3 signatures, then you can do this, or if you have 2 signatures, you can do that, then that's a powerful element. So we don't have to do this with a paper anymore. But now imagine if there's contracts behind it, if there's money changing hands, if somebody verifies something and 2 other signatures go on top of it and then money gets transferred right away. So that's a powerful concept. Smart contracts, I mentioned that is a very basic tenet of the blockchain. It's really about programming logic, business logic with money, with rights, with contracts, with values changing hands. Oracles is a new concept. Oracles are like information sources that the smart contracts could be using. For example, there could be an oracle about the weather with weather data. So I could write a smart contract that says, well, if the temperature is over 90 Fahrenheit, then open the door or start the AC. This all could be programmed, or pay me $10. Or there could be an oracle that's tracking NBA scores. And if I have a wager between me and somebody else, automatically it's going to check the scores, and whoever wins, then the money will be transferred automatically, all kind of invisibly within just putting the rules in, and as soon as the game is over, then the money is transferred. And the concept of state machines is important because really, blockchains are really a state machine. That's what it is. It is a state being, it's either this or it's either that. But it maintains these multiple states very efficiently. And it's been said that people will ask, like, what is the blockchain for? And you have to think of the fact that not everything is for blockchains. It is not a replacement for databases. It is an enhancement. It has its own uses. And one way to answer this question very simply is by saying, if you can do it on a spreadsheet, then don't use a blockchain. Because it's really about tracking states of information. And that's really the concept of blockchains being virtual state machines. Now, let's talk about the banks for a little bit and what's happened in financial technology, otherwise called FinTech, and how it is going to relate to blockchain. So if you think about what happened with FinTech and the banks, arguably FinTech was a response to the fact that the banks, for the first 10 years of the internet, did not do too much really in terms of innovation. What did the banks bring us in terms of when the internet came along after 10 years? We have online banking, we have online brokerage, so we can buy and sell stocks, and we can pay some bills on the internet, right? So, okay, we're licking less stamps, that's good. And then if some of you have some advanced features, depending on the bank, now some of you allow you to take an image of a check and deposit it there without visiting an ATM or going to a branch. And then my question is, like, why are there the same number of branches as we had before? Why do we still have so many ATMs if the internet was supposed to really be that innovation platform? So the banks did not do too much. They did the strict minimum. As a result, as a response, a bunch of FinTech companies started to spring up, and the most famous of them is PayPal. PayPal exploited the payment aspect of the internet and what it allowed, and now PayPal is a huge company. Alipay in China is bigger than PayPal, and they are doing the same thing. There are companies that let you get loans. I can get a loan of 20 to 30,000 in 3 minutes. Just by checking, they check my profile quickly, and I would challenge you to go and go talk to a bank and get a loan in 3 minutes. You won't make it through the door. It will take you that long to enter the bank's branch, perhaps, and get an appointment. And some companies now using robo investments, like Simple, Wealthfront, and so on. So that's the point here, is that a lot of companies exploited the technology of the internet in ways that the banks could not. And the same thing is going to happen with the blockchain. And all these startups start small, so they don't bother the banks too much, and then they get big before you know it. And the same thing is going to happen with the blockchain. These are 300 or so companies, blockchain companies in the financial services only. I made that landscape a few months ago, and I updated continuously. So basically, if you're not on this chart, you don't exist. That is like the landscape of blockchain companies in the financial services. And yes, many of them are small, and many of them will not make it, but some of them will make it, and some of them are going to emerge. So really, in terms of looking back and looking forward, where are we in this, in terms of phases? We are really at the beginning of a new phase here, perhaps lasting 10 years, perhaps lasting 20 years. And the last 20 years of the internet and what gave birth to big companies like Google and others were really about publishing information, personal communications, e-commerce, and social interactions. And now we can say that the new phase is really the blockchain promise now. It's really about the decentralization of trust, because trust can happen between peers without anybody in the middle. And that value can flow. It's not just money, it's any kind of digital value. So that is the next 10 years, the next 20 years. And I'm not one to hype this. I'm not saying this is going to happen next month or next 6 months or next year. This is a long-term phenomena. And I would caution anybody to want to rush what we can do with the blockchain and to hype expectations. Because some of you that were around and involved with the internet back in 99 and 2000, what crashed the internet in 2000 is that we rushed it. Some people wanted to rush it, wanted everything to happen right away, wanted public companies to become public without even having revenues, without proving their business models. VCs were pouring money without checking things, and the whole thing crashed. Arguably, maybe we could not avoid it, because Carlota Perez has this paradigm shift model she's a big thinker that analyzes the technological cycles. And she figured out that for the last 100 years, there are two phases when new technology happens. There is the installation phase, and there's the deployment phase. So we install the technology first, and then we deploy it. And you know what happens between the installation phase and the deployment? A crash happens. There's always a correction that happens, and then everything moves up again. And that's what happened with the internet in 2000. And then everything went fine after that. So I'm not sure where we are when we're going to have that crash, but we're still in the early days of the blockchain. So we're definitely going to crash it at some point because we're pushing the envelope in certain things. Like some of you have heard of the DAO, the DAO, Distributed Autonomous Organization hack that happened last month, where a hacker siphoned some funds. And there's a long story behind it. But we were pushing the envelope. And now we are learning a lot from what happened, and then we go forward afterwards. Here's an easy way to remember the main aspects of the blockchain. I came up with this acronym, ATOMIC, A-T-O-M-I-C. It's really about assets, it's about trust, it's about ownership, it's about money, it's about identity, it's about contracts. Identity is going to be a very important aspect of the blockchain. Because right now, if you think about it, who owns our identity online? If you're on Facebook, Facebook owns your identity because you are using Facebook. And in some cases, Google owns my identity because I use Google to sign on everywhere in other things. But potentially, identity could be decentralized as well. But identity has to come in with applications. It's like having a passport. What good is a passport if you don't travel? It sits in your drawer. It's useless. So the identity, e-identity or blockchain-based identity need applications as well. The travel is the application for the passport, and the airport are part of it. And applications are important aspect in terms of the identity. Now, all of this comes with a warning because there's lots of responsibility. When things are peer-to-peer, it means there's nobody in the middle that oversees this. So you have to trust the network, and you have to trust the protocol so that accidents don't happen. That's why there's lots of testing, and then and we're trying to push the envelope in terms of what two entities can do when it's all up to them to agree on contracts and move money. We cannot talk about the blockchain without talking about the innovation potential and what happens in regulated or unregulated environments. Because it is about money, and money is regulated all over the world. There are regulatory entities in every country. And there are maybe more than 200 countries in the world, and there are more than 200 regulatory entities. Imagine if each one of these entities were to regulate the blockchain in their own way or interpret it in their own way. 200, that's more than the flavors of ice cream that I could name. And then imagine if that would happen, then it would be very confusing. So there are lots of regulators right now that are looking at the blockchain and trying to see what kinds of changes they have to make, what kind of regulation they have to impose. And we are warning them right now. People like me and others are saying, well, let's wait a little bit. It's too early. It's too early to regulate a new technology. Let it become a little bit more in the adult stage before regulating it. It's the same thing as if we had regulated the internet back in 95 or 96. It would have been disastrous. We would not have allowed it and the web to prosper and to evolve in areas of e-commerce and other things. So we have to wait until the blockchain evolves, until the blockchain matures, and then we can see what updates we can do to the innovation, to the regulation. So my challenge to regulators, usually I tell them, why don't you innovate instead of regulating? And this, because blockchain is technology innovation. So innovation needs innovation on the regulatory side as well. And it starts by being permissionless as an innovation, the blockchain. Anybody can get on it, anybody can get onboarded. So we don't want to make it too restricted initially. And that is the challenge of regulation. That's why the most innovative applications of the blockchain in the financial services industry are going to happen outside of the banks, in areas that are not regulated yet, in areas that can experiment, that can try things. And then we can see what regulation needs to be adapted to it. So I talked to you about proving a lot of things. That's what the blockchain allows. So in the book, I have this pyramid of I call it the proof pyramid. So at the very bottom of the technology side, it's a proof in a consensus, because the blockchain is about consensus. The proof of work is really the consensus element of the blockchain. It's really proving that the transaction is validated, that you are the owner, and that you are sending it to this other person. So this is all proof being proved in the consensus itself. And there's many ways to have the consensus done on the blockchain. I'm not going to go into that. Then above that, there could be a proof as a service, and above that is proof in a service. So the more you go higher, the more it's a business thing, and the lower is more technological. So here are some examples, and this is also in the book. But these are the kinds of services that I'd like us to see now. And this is where some of these services will be potentially possible on the blockchain. Proving of an asset, proving of ownership. And I wrote an article 2 months ago on TechCrunch talking about the fact that we're saying, like, what is going to be the next Google of the blockchain? And the argument was, today we Google for information for everything, right? We Google for information, we Google for products. That's the starting point. Where are we going to go in the future to prove things, to prove services, to prove ownerships, to prove receipts, to prove provenance of something, to prove physical address, to prove things? Maybe it'll be another form of Google, maybe it'll be another way of doing it, but this is kind of the promise. This is where we should be going now, is developing these kinds of services where we can go and check things on the blockchain. And this is kind of one of the promise elements of the blockchain in terms of services going forward. Here's an example. I mentioned to you earlier that there are some blockchain applications that do not need the web. And this is one called Open Bazaar. Open Bazaar is a peer-to-peer protocol for commerce. Think of it as eBay without eBay. So it's a protocol and a platform that allows anybody to buy and sell anything from anywhere around the world without having to go through licensing fees and without credit card fees. Disclosure, I'm on the board and I'm an investor in Open Bazaar. And they've recently launched, and this is an example. If you download the client, basically, you just use the application from that client. You don't use the browser. You don't use the web. You just use the client itself, and then you connect it peer-to-peer with others anywhere in the world. So that is an example of a blockchain application that is peer-to-peer. It's arguably one of the largest right now in terms of scope. It sits on top of Bitcoin. And here's the benefit. Here's somebody that's done close to 20 purchases on Open Bazaar. All it cost them is $1.40 in terms of transaction fees. That's it. So that's really the promise. It's free commerce. What the blockchain is about is really, if you look forward now, it's really about reconfiguring trust. And that is a big word, changing trust. And it's really about having humans, us people, machines. It's a combination of humans, machines, and regulations. I'm not implying that regulators are not humans. That's not why it's on a different part of the slide. But regulation is a fact of life. So we have to kind of account for it, because otherwise some bad things will happen. So it could be self-regulation, it could be new types of regulation. It doesn't have to be the old way of regulation, but it is legal. There is some legal aspect to what the blockchain wants to do. When we send money back and forth, money is not just a game. There's lots of stake when you're moving assets that have value. So we have to keep that in mind. And really, it's really about decentralization. What the blockchain has enabled is decentralization, if you think about it. The blockchain is a technology, and now we have decentralized services. And that is the focus of my next research, is to talk about, to really go deeper into the types of decentralized services and the impact, whether they are distributed autonomous organizations or other types of services. It is really about wealth creation. There's a new economy out there that is being created based on crypto technology services. And information is also part of it. So now the new types of applications that are decentralized, everything is encrypted from day one. So security comes first, and peer-to-peer encryption comes first. It's not an after-the-fact kind of thing. So there are platforms now like Enigma or Scenario that allow you to write applications and everything is encrypted from the user to the databases to the applications anywhere, and that's part of it. So that's very important. And the blockchains are a key piece of this technology. What does decentralization look like? Just some elements. It has no intermediaries. There's no permission required. Anybody can come in. It's no overhead, flat structures. The trust is built inside of the network. There is resiliency against attacks because there's not one center that you can attack. There could be 5,000 computers. What if you attack 4 of them, or 10 of them, or 1,000 of them? The others will keep humming. There is no central point of failure. Governance is done via via consensus, according to some framework. And it's really about peer-to-peer from a technological point of view. So what's going to happen going forward? Again, in the book, I draw a lot of analogies with the internet because I was there. I wrote another book 20 years ago called Opening Digital Markets that basically did the same thing, explained e-commerce and e-business at a time where businesses could not see clarity with it. And for some of you that were there, it took us a good 3 years for everybody to really understand the internet. And we're maybe in the first of those next 3 years with the blockchain. So what's going to happen? We're going to have new companies and new behaviors that will spring out. There will be new companies that will be blockchain giants. We don't know who they are yet. The same way as the internet changed companies inside, the blockchain is going to change companies inside, whether they are banks or other types of industries, energy, for example, or healthcare for medical records. That's a big potential application. Some industries were threatened or transformed, like the publishing industry was transformed with the internet, or the retail industry was transformed with the internet. So we're still waiting to see what's going to get transformed with the blockchain. I can guarantee you the financial services will get transformed by the blockchain because that is a very key element of it. Maybe the role of the banks will become more as a back-end service, and we're going to have a lot of front-end services ahead of it. Like when you use your Apple Pay, you tap your phone, it's drawing money from your bank account or from a card automatically. You're not touching your bank account. It's being done for you automatically. Same thing if you have an event and you connect Eventbrite to your bank account. When they pay the tickets, you can put that money in your bank account and you haven't touched it. It's all done via linkages. And then fourthly, the technology. The internet is a development platform, and the blockchain is going to be a development platform. So in closing, I just offer these 13 generic ideas. This is for companies that want to implement the blockchain. So these are generic ideas like where do you start? Well, think about intermediary functions. If you're doing something that has a trust component, maybe you can change that. Maybe you can put the trust in the network and maybe have value-added services on top of it. We're not saying that all the intermediaries are going to go away, but what we're saying is that their roles will change. And the key thing is to identify that change early on so you can change it yourself as opposed to having somebody else change it for you. Anything can be bundled and rebundled, unbundled, and then reconfigured on the blockchain. There's a new flow of value. So maybe we can earn some cryptocurrency and then spend them in a specific service within what I call a crypto-based economy. There's an app called Lazuz that is supposed to be a competitor to Uber. You download the app, and then you're driving around, let's say. And Lazuz is just collecting data about your driving patterns because it knows where you're going, it knows what's going on. And then you earn Zooz points, for example. And then the next week, let's say now you want to ride, you can use your Zooz points that you've earned to then take a ride and pay with those Zooz points. So think about it here. We haven't touched any dollars or any real money. You've just done some work. It could be active work or passive work. That work could have been a bounty on you might have written a program and maybe somebody gives you some tokens that you can reuse to buy something. So think about those elements in terms of something we earn can be spent in a transaction, and it's all done via cryptocurrency within the same ecosystem. So we're going to see a lot of these examples. New legal frameworks, updating the legal frameworks, creating and issuing digital assets, the banks. It all starts by having a digital asset, by having smart properties. So either you create it at the beginning or you convert it, and then it can be transported on the blockchain. You have to embed trust rules in transactions now. If this, then that, business logic with money. Implementing digital signatures, multi-sigs. Verifying records, transactions, processes, verifying authenticities. Am I who I say I am? Do I live where I say I live? Do I have these credentials? Have I really taken those diplomas? So all of this could be verified on the blockchain. And then enabling smart things to transact automatically. The Internet of Things is a big aspect of the blockchain. There's a company in Germany that's an energy company that's putting a device in electric cars. And when the car is stopped at the red light, it starts to draw some energy in micro transaction levels, but it's all paid via a cryptocurrency. And that one is based on Ethereum. Another example is there's a street in Brooklyn where residents are buying and selling energy between each other based on an Ethereum blockchain as well. So excess energy is being traded on a peer-to-peer basis. These are some examples. In closing, I have to ask you some questions and ask us some questions. I know you will have some questions. So we have to think about who will be the next Google of the blockchain. We still don't know. And I'm not picking on Google because I am at Google. The same question applies to other things, like who will be the next Oracle of the blockchain, the database? Who will be the next Netscape of the blockchain? If you think about it, what Netscape did at the time when the web arrived, all the pieces were very disconnected, and they were the first to come up with what was called a web server. So they put a bunch of technologies and tools and libraries and all of that into one server, and they said, boom, you want to be on the web, take that server and buy it. Actually, the company that's sponsored the books that you'll be receiving at the end, Block, could be that Netscape of the blockchain, because they've assembled all of these tools into one server. Today, we're still at the Home Depot stage of the blockchain. If you want to start and get involved and develop on the blockchain, it's like going to Home Depot. You have to buy the nails, you have to buy the 2x4s, you have to buy everything and assemble it yourself. We're not even at the IKEA stage where you can just get it all and then, but that's kind of where we need to be, and that there's an opportunity there. Who will be the next X? Fill in the blanks. Who will be the first large bank to accept cryptocurrency, or Bitcoin, for a matter of fact? And I predict some bank will do that this year. When are we going to cross the $1 billion mark in terms of assets traded on the blockchains? I predict by the end of this year, we're going to have $1 billion traded in terms of assets in the capital markets on the blockchain. It's going to happen. There are some decentralized clearing networks that will be emerging, and some of the existing clearing houses and the NASDAQ and others are working on it. And then finally, when are we going to see the first cryptocurrency-based businesses, like the example I gave you, where you're earning something and then you're spending it on a transaction in the same ecosystem? I'll end by making 3 predictions, maybe could be a little bit unconventional or contrarian. Cryptocurrency payments is not what's going to disrupt the existing world. It is not about payments. The blockchain is not about payments. It goes beyond just payments. Your Visa card works well, our payment system works well. It's not going to disrupt that so quickly. So let's move beyond that. And then the second one is more or less a message to those that think that the distributed ledgers are really everything. It is not. Distributed ledgers are about improvements. Blockchains as a whole are about innovation. And then, you heard me say this more than once, the crypto economy is where the value is going to be created. It is not about us moving $1,000 into a Bitcoin account or just moving some money and buying cryptocurrency. It's about creating new cryptocurrency, creating a new value out of nothing by just doing work, by doing active work or passive work, and then creating this new economy. So that's what I want to leave you with. Thank you very much.
Could you speak a little bit about the Ethereum DAO hacking issue that happened? Like what happened actually, and then what the effect was on blockchain technology?
Yeah, I mean, I wrote last week a 3,000-word analysis of it in terms of what I thought happened and what we can learn from it. I think what happened is unfortunate. It was a hack, for those of you that don't know the details. It was a hack. Somebody exploited a weakness in the smart contract that the DAO had implemented, which allowed that hacker to move funds to a child DAO for no reason than just being a bad person. And I think what we can really take away from it is really the lessons more than what happened and should have happened. And the lessons is that it's not easy. I mean, it's really about money. Programming money is not for the faint of heart. It is not a trivial thing. And the biggest lesson is that, again, we have to walk before we can run. So maybe there was too much money in there. I mean, you don't need $150 million to do an experiment on whether you can do autonomous funding of companies and projects. You can have $1 million is enough, or maybe 10 million is enough, and in small chunks, and giving away $500,000 at a time. So by taking all that big money, it raised the attention. Like if I walked into this room and I told you I have $1 million in my pocket, I mean, it's like I won't feel safe walking outside, on El Camino. Everybody knew I had $1 million in my pocket or somewhere. So it drew attention, unfortunately. Now the good thing is that it's calling now for more lessons, for more best practices. I mean, fundamentally, Ethereum is fine. There is nothing wrong with Ethereum. It's just, again, happened. This is like a micro manifestation of the Carlota Perez principle that we always overshoot, and then we retract, and then we're good. Because we don't know what the boundaries are. And the DAO was like, we pushed the boundaries a little bit too hard, and we hit a wall, and we got hurt. So now we know there's a wall there. Like, let's not go there. And we're going to do some things a bit better. So that's kind of what I always look at this in a positive light.
It's hard to formulate exactly what I want to ask, but you touched on the regulations for the blockchain technology, and you mentioned that internet was not regulated strictly when it appeared first. So now I think blockchain and Bitcoin are regulated very hard in some countries, but there are not much regulations in other countries. So do you think there is some risk for the countries that are not regulating it? And what are those risks? And I don't understand. I don't know much about blockchain, but for me, it seems having a regulator kind of destroys the idea, right, of the decentralized place. If there will be a regulator, then it's not decentralized anymore. So
Sure.
Could you please elaborate on that?
Yeah, very good question about regulation. So I think there's two aspects to this. One, you have to think about regulation in the consumer sense for consumer markets, consumer usage, and then there's the business aspect. And there is already a bit of regulation because it's really about money transfer. So in the US, it's FinCEN, in Canada, it's FinTrack. So there's money, like an exchange, a Bitcoin exchange, is regulated the same way as a money trader would be because they're exchanging money. So they want to make sure that they catch money laundering, for example. So that's fine. I mean, Bitcoin should not be the vehicle to facilitate that. And it's not, by the way, it's not the great vehicle for money laundering. You're better off putting some green bills, US dollars in a suitcase if you want to money launder, because that's really the more preferred way for doing it. And then there's the business aspect. The business aspect, the regulation there needs to be updated. For example, in the area of capital markets, they have to recognize that if a transaction happened on the blockchain, that record is valid. They have some standards. There's the ISDA, it's the Securities Standards Association, like for derivatives specifically, and they have standards. So they're in the process of updating their standards so that they can accept blockchain transactions as a record that is accepted. So that's kind of one example of how regulation can move up with it without really constricting it. To the second part of your question about it's better if there's no regulation, well, to some extent. I mean, regulation is good if it's done properly. I mean, consumer protection is important. So you want to be protected as a consumer as well. But we're still in the early stages. So if there's no regulation, that's fine. Let there be more experimentation. And then even if we fail, even if we make mistakes, the mistakes and the costs will be small, except for the DAO, which was a big one. But it's okay to fail in small, like we're not falling from very high levels. We're learning. And then in 2 years from now, we're going to look back and we're going to have so much experience and best practices. And then we're going to have the right type of regulation updates and ones that do not impede the growth of the blockchain. But there could be some regulations that would encourage it. If you know that if a government says, yes, blockchain transactions are good, and there are governments that are doing that in the UK, for example. Specifically, the issue they had was in issuing grants, government grants. There was some fraud associated with it. So they are now saying they're going to use the blockchain to issue government grants and eliminate fraud, because the blockchain has that trust factor in there that you cannot really cheat too easily. In Asia, I think it's in Hong Kong or Singapore, there was some fraud with China. It was in China. There was some fraud with some invoices. So somebody defrauded a bank by sending multiple invoices. And they solved that by putting the process on the blockchain and doing unique hashes for every invoice. So that when a second invoice came in from a hacker, let's say, with the same information, more or less, the system knows, and because the hash is unique, and then they are now catching the fraud with invoices. So these are some examples, and these are good signals that show that there are lots of applications for the blockchain.
So how would you compare the Mt. Gox issue to the DAO?
Okay, well, I mean, one comparison is that the Mt. Gox losses were gone. It was very difficult. It was impossible, even up to today. The funds were not recovered. The DAO is still ongoing. It's an unraveling story, so we don't know the ending yet. But it appears that we can recover the funds, at least by preventing the hacker to take them away. So from that perspective, the damage seems to be containable at this point. So that's all I could say. And we're still in the learning stages. Obviously, it's a bit of a challenge from a marketing perspective, from a market perspective. And we have to hold our breath and see how it's going to end. So I'm not speaking on behalf of the foundation specifically. This is just me as an analyst. I think they are, that being said, there are lots of efforts and work being done to make sure that this hacker does not keep the funds.
I recently learned there's a coffee shop in Palo Alto that accepts Bitcoin, so I was excited. I can see the value from a business standpoint in order to kind of bypass those interchange fees and adopt Bitcoin or cryptocurrencies in general. But from consumer standpoint, for me to kind of buy into, or the mainstream to kind of buy into cryptocurrencies, they have to have confidence in the valuation of the currency. And as we have seen, the valuation has kind of like jumped all over the place. So what's your view on when this is going to stabilize for the mainstream to jump in?
True. The question is about the fact that there is lots of fluctuation and speculation and lots of volatility, basically, on the price of Bitcoin and other cryptocurrencies. This is kind of expected because we're in the early phases, unfortunately. And there's been lots of ups and downs. At one point, Bitcoin was close to $1,200, and it went down to 200. Now it's back to 600, 700 more or less. So it's not for the faint of heart yet, and it's kind of risky if you think of it that you're using it for something. I think it's going to stabilize over time. That's what I would expect. Unfortunately, there are speculators, but I would expect it to stabilize. And think of it not just as Bitcoin. There are many other cryptocurrencies. I mean, Ethereum is one of them. There will be private cryptocurrencies. So there will be hundreds, if not thousands, of cryptocurrencies. Any company can issue its own cryptocurrency. And it could be tied into some value or to some kind of work that they are doing, to some services. So right now, it's not for the masses. That's why I'm saying that I don't think that Bitcoin is, that the killer app is not payments. And we're still in the early days. So eventually, it's going to stabilize when there is more balance between demand and supply. But we haven't still issued all of the Bitcoin that still exists out there. We're still mining it. So we're still in the very early days.
All right, great.
All right.
Thank you for coming.
Thank you.